don't know how this light, why is this light making my face look shiny? I don't know. See if I'm over here, if I'm over here. We're already live on YouTube, by the way. Okay. So we gotta tune in early. I gotta wait for this thing to make sure that it's not yelling at me first.
This is a pretty tame pre-show sesh here.
Pretty sesh.
Yeah.
Pretty so sesh. Pretty tame. Pre-show. Ready?
Yeah, are you ready?
I was born ready, baby. Welcome, everyone, to your weekly edition of the Not Your Average Investor Show. This week, I challenged GC over here with a very special mission. And it is because you hear all the time, I got the best market for this, I got the best market for that. Here's a list of top 10, blah, 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 this and that, wah. People seem to have their own opinions on what the best market is. And for example, I was just listening to this like bigger pockets, kind of like best markets, and it feels short-sighted to me. Not a single one of them brought up home price appreciation. There was like all this like overinvestment in like low price and cash flow. So I challenged Mr. Genius Concepts to come up with a criteria and a way to evaluate what is the best market for rental property investing. I'm your host, Pablo Gonzalez. With me, as always, a man that I affectionately like to call GC because he's got the genius concepts, knows how to generate cash flow, is a great co-host, and because he goes by the name of Greg Cohen. Say hello, Greg.
Hello, everybody. Fantastic to be with you.
What'd you think of that intro, bro?
I thought it was awesome.
Pretty good intro.
Yeah,
Pretty
really good,
intro.
man. They keep getting longer and longer, and I'm like on the edge of my seat waiting for you to tell me to say hi.
You know, I'm doing it because in YouTube, like you need to have like this like exciting hook, and when we put it at the beginning, and then so that they watch, and we can also put it in the beginning of the podcast. Also, yeah. So I'm trying to make the content perform a little better. But you know what always performs great?
What's that?
Our usual tradition.
That would be.
I don't know. You tell me.
No, baby.
All right, we got Chris Lee from Bernardino Beach checking in. Good to have you.
All right,
Jeff Pettijohn from Missouri checking in. The world-class composer, famous musical scorist,
Mr. John Williams.
Mr. John Williams. We got the early bird in the house.
Mr. Dean Curry.
Early bird. They talk about your market in old.
We will compare that as I was listening to it.
We will be talking about it. We got our leadoff hitter batting fifth today.
John Hanning.
Mr. John Hanning. We got Joanna, our community manager, in. We got the man of steel.
Vincent Barber.
Vincent Barber. It's good to have you.
He's coming to Summit.
He's coming to Summit.
Yep.
We got the Shaman.
Nadeem Shah. He's coming to Summit.
He's coming to Summit. Nadeem. Good to have you, buddy. Who else we got? Jeff Lendve in the house.
JWB teammate representing.
There you go. Who else we got in here? Renee Castle from Hayward, California, in the San Francisco East Bay.
New name. All the way from the Bay.
Renee, welcome to the show, my friend. Make a home for yourself here. Maybe make a castle for yourself here, if you would like. All right, we got Ed Lowry, LinkedIn Lowry,
I love it.
In the house from Jacksonville, Florida. We got the Maven from the mountains of Denver.
Ms. Leslie Wilson coming to Summit.
We got him. We got Mark Norman.
All right, Mark.
Always with the great questions from SoCal. I didn't realize that Mark Norman lived in SoCal.
What do you know?
Well, you know, I don't know that. Now I know that. All right, here we go. Who we got the MVP in the house that everybody knows?
Mr. Lee Bishop.
Mr. Lee Bishop, who's still in Galveston, Texas, where I heard he bought himself a brand new house to retire in.
Ooh,
yeah,
awesome.
Not too shabby. We got Gina Kaysen from Jacksonville, Florida. Another new name.
New name.
Gina, make yourself at home. Make a friend in the chat. Everybody's friendly here. We got the ringmaster in the house.
Andrew Barnhill.
Andrew Barnhill.
Coming to Summit.
Coming to Summit. We got the Summit. We got the number 2 Steelers fan in the Not Your Average Investor.
He might be the number 1.
He might be the number 1.
Louis Tudnell.
I already depositioned you as Greg number 2, so I'm not going to deposition you as the worst.
There's
Steelers
the better
fan.
Greg, so you're not going to just say really drive me into
Rockin' in Rockland, Louis Hudnell. We got Eddie Harris from Atlanta. Good to have you, Eddie. We got the fairy godmother in the house.
Miss Jen Filson.
From one of the most beautiful places in America, Monterey Peninsula. We got Pankaj Patel checking in from the Bay Area. Another new name. Love to have you, Pankaj. Welcome. Good to have you. Who else we got in here? Alex Diaz from ADM MGT GP LLC.
That's a lot of acronyms.
It's a lot. Very little vowels. So very hard to pronounce.
So Alex is really smart.
But Alex is very smart. Has 8 properties with JWB.
Very smart.
And I would like to take advantage of the 3-home package by end of January. We call that
Alex.
The bundles, Alex. Good to have you.
Welcome.
Good to have you on the show. We got Anthony Ragg with 2 G's.
Another new name. I always appreciate the 2 G's at the end of a name.
It is. Because you are Greg Goga. Good to have you, Anthony. With a W in front of the R and 2 G's at the end. Wonderful, wonderful mix of consonants and one vowel as well. That's how you do one vowel with a lot of consonants right there. Thank you, Anthony. Good to have you, man.
Nobody ever butchers how to spell it.
Nobody puts that. John Bradford in the house? Is that another name?
I believe so.
It's a pretty common sounding name, but good to have you.
Great to have
Misty and Troy Johnson from Colorado. Not a new name.
Not a new
Top
name.
10 attendee. Barely made it. We got Le Monsieur.
Reggie Fonse.
Reggie Jose from l'Island d'Empire. Bonjour, Reggie. Good to have you, Reggie. Good to have you back. Who else we got in here? Our favorite name to pronounce, Aaron O'Neill. Into the lights. Also coming to Summit, I believe.
I don't believe Aaron can make it.
She's not coming to
just found out. Yeah, we are super.
Oh, Aaron, I'm sorry to hear that.
Hope you can make it. Hope you can find a way, but I heard that she's not going to be able to.
Okay, got it. Oh, man. All right, Aaron, we'll see you next time. We got the first family of the Not Your Average Invest Show. The patriarch and the matriarch, Ken and Carolyn Moline. Ooh, we salute you. Good to have you here. All right, good. Alex is having a hard time connecting with.
So he
sales.
called the text number.
Call the text number.
The text number is for text.
So,
The call number is for calls. 904-677-6777 is the phone number to the office. That text line is for texting only, so you can't actually call.
We need to be more clear about that.
We do.
Yeah.
Might give the wrong impression.
There you go. Yeah, Alex, thanks for coming to the show and letting us know.
Absolutely.
Left a message, text, and no replies. That's atypical. So
we will get on that.
We'll make sure to handle that. Alex. Good to have you on the show.
Making a little note.
All right, make a little note, GC. While you're making a little note, I want everybody to make a little note of something that's happening on February 28th and March 1st, and that is the JWB Not Your Average Investor Summit. We only have, what'd you say, 15 tickets?
15 tickets left.
1-5. We're getting very close to single digits. It is 2 days of education, connection, and a lot of fun. That's going to happen here in Jacksonville.
We had a lot of fun last year, but I'm guaranteeing we're going to have more fun this year.
Keeping it small, only 100 people. Last year was a bit bigger, and we decided to go the opposite route. We want intimacy here. We want to connect with our friends. We're keeping it to clients only 100 folks, only 15 tickets left. Super, super pumped to see everybody. Hugs all around. Super pumped for the karaoke night that Jen Filzen's putting together.
Oh yeah.
Yeah.
I heard a whisper about that.
I heard a whisper.
Can't wait.
I heard that you're gonna sing. I just can't wait to be king from the Lion King. Is that what you do?
I don't know. I didn't hear that whisper. But apparently now that whisper is out.
You're more of a Cher. You do like a Cher song, like I do. If you believe in life after love.
Eclipse of the Heart, maybe.
No, that's my song.
Oh yeah,
that's my song, Greg. I do a total eclipse of the heart. That's to die for. You do not want to miss that. But more than anything, I want to hear Greg sing the theme song from The Bodyguard. I Will Always Love You.
I don't know about that.
Anyways, the summit, jwbsummit.com. There's only 15 tickets left. I'm going to save him from the embarrassment. Probably not going to karaoke. That's not his vibe.
I do want to make a special note, though.
Yeah.
It is for clients only, but there is still time. If you're not a client, which means if you do not already own JWB turnkey properties, you still have time to come to Summit. What you would want to do is to get on the phone with us and explore investing in a turnkey property. If you have a property under contract, we have a space for you at Summit. You can get a ticket, but you have to start those conversations now. So if you're not a client yet, reach out to us. You can text 904-293-0341. You can call 904-677-6777 or email us or info@jwbcompanies.com. I don't know. Send snail mail, whatever. Get on the phone with us.
Messenger
and we would love to see you at Summit.
So that being said, what people really love about the summit is, number one, the connection and the sense of community. Like, that is irreplaceable. The other thing that people love is this like behind the scenes look into the magic of the Jacksonville market, which brings us to today's discussion and the importance of market when you make a selection. We talk about it all the time. Most people have the order of operations wrong. They think, how do I find a property? Once they find a property, it doesn't matter where it is because they were just focused on like finding a property deal. And then they're just like, oh, how do I get a property manager? They look at like 5 property managers. And what we talk about all the time is that the right order is to find the best team. And then once you have the best team, find the best market. Like, look where the best teams are and then analyze the market, because the market will really dictate your returns. The team dictates the experience. Market dictates the type of returns you're going to get, the timing around the things that you're trying to do. And, kind of like what I said at the intro of the show, I find that most folk when they are looking at a market, they're looking at maybe one, two indicators, right? They're overcorrecting for certain things. And, because of that, it seems short-sighted. So I challenged Greg, and at first he was like, what do you mean come up with the three best markets? But normally when I put an idea on his head, it percolates for a while, and then he surprises me, which he did. He came out with this really interesting architecture of how to pick a market. GC, you want to tell us a little bit about what you came up with?
Yes, absolutely. I mean, this is the deepest dive that I have done to help people see how to choose a market. We have done a deep dive before, but as we continue to lean more and more into the data, I want to help the everyday investor who might not have taken that leap of faith to invest in that first rental property. How do you start from square one and know that you're moving in the right direction? How do I know that I'm directionally accurate for at least the market? And I think by the end of the show today, you'll be there. But here's my deep burning desire and passion, and why I stayed up way too late last night and missed our run again to make sure that this.
When I get an email from you at 12:30 midnight, I assume we're not running.
It was like 1
at
o'clock
5 in the morning.
I got inspired late. I had the slides done during the day, and then I got inspired later. Yeah. Well, the reason is because I find that most investors really are misguided when it comes to evaluating a market, and here's why. Because they don't understand that there are 5 ways to make money in rental property investing. Most investors only pay attention to one. That all they understand is one. And if all you understand is one profit center, what you're going to do is you're going to be more likely to maybe listen to one of those articles that are written that say, here's the top 10 list for X, or here's another article, here's the top 10 list for Y. And you're going to be myopic in your viewpoint, and you're going to go and look at that list. And that's going to be your charging point forward. Unfortunately, if you only focus on one, there are 4 other ones that you are leaving money on the table. If we start with a deep foundation of understanding how this thing pays us, it helps us understand that it's more than just one criteria that leads you to choosing the right market. Yeah.
So real quick, the 5 profit centers are cash flow, home price appreciation, tax savings, debt pay down, and inflation hedging, right? So those things are, if you understand all 5 of those, you don't have just the opportunity to say, hey, I want to buy this many properties, or I want to have this much wealth, or whatever. You have this opportunity to really create outcome-based scenarios. And we're really talking about outcome-based investing lately, right? Like, how are you not investing in real estate just to get rich? How are you investing in real estate for something that is deeper than that? That's your why, that you really desire, that you want to hit on a timeline, and you have like a very specific goal, GC. So if we want to break it down into these like 5 profit centers, what are the indicators that, you can't just look at one indicator? What are the main indicators you're looking at in markets?
Yeah, absolutely. Well, it comes down to cash flow and growth.
Yeah.
Cash flow and growth is where you're trying to go in order to be able to produce the best profitability for your rental property investments, and ultimately to accomplish those financial outcomes like we're talking about. But the way that you get to cash flow and growth is very, very different. So what I did was I put together 7 criteria for determining the best market that we're going to share in just a few minutes here. And what this market criteria helps you do is to analyze each market. I went through the top 99 metros in the entire country, the biggest cities in the country. And what it does is it allows us to rank, how do these metros rank? And what's really interesting, and this is a big takeaway for this show today, I want you to leave, if you leave with nothing else, number 1 does not mean number 1. Okay? Number 1 does not mean number 1. Because when you are number 1 as a metro, as a city, in one of these categories, it's very likely, it's actually very true that you're going to be very bad in another one of the categories. And the goal here to maximize your profitability, the way that we've been able to drive over $300 million in profits for clients, is because we focus on markets that are above average at all of the criteria, right? We focus on the Jacksonville market, which is above average at all of the criteria. So that's a big takeaway, Because when you're above average at all of the criteria, what you're going to see is that you're able to maximize your profitability from all 5 profit centers. If you are number 1 in one of the categories, and I'm giving you the spoiler ahead early here, but we're going to take a look at this. If you're number 1 in one of the categories, let's say that you're number 1 for lowest prices in the country or best rent to price ratio, you're probably really darn good at cash flow. But what are you not good at, Pablo?
Maybe growth.
Growth, right?
Yeah.
Home price appreciation,
Yeah.
right? Because if your home prices had appreciated and you were better in that regard, you wouldn't be lowest for home prices.
Yeah.
Right? So what you got to focus on is not how do I find the number 1 best market for cash flow? It's how do I find the market that is above average at as many things as possible? That is going to be the best market for you to build a robust and profitable portfolio over a full market cycle.
Got it. So when I think about this, what you're talking about, this idea of being above average in all categories, and that's the way that you serve all 5 profit centers. I think of those pie charts that we often show, right? Like the Pac-Man principle, where we show that home price appreciation is like 60 to 75% of like the wealth building. Cash flow might be like 15 to 20. Tax savings is like 10%. And then you have like the debt pay down that's usually pretty consistent based on price. And I think of the ingredients to bake that pie being these criteria for what you want to see in a market, right? So like the 7 criteria, the 7 ingredients to bake the pie are rent to price ratio, current population size, home price appreciation, rent price appreciation, population growth, median income growth, and median home sales price. And if I'm going to take that, I'm going to show that later, right? And I'll show you how to get this presentation in a second. But if I'm going to take that and I'm thinking of like, how do we bake the best pie? And I think of this analogy that you're saying, some people got a real sweet tooth. They might want the sweetest pie, right?
Oh, go on.
Other people, so they're going to want the pie with the most sugar, right? Other people love savory pies. Maybe they want a quiche, right? Maybe someone is like a crust snob. I love the texture of a buttery crust. Other folks, it's got to be a cherry filling or I'm out, right?
How about other folks?
Other folks might just want a huge pie. They're just a giant glutton. They want a giant pie, and other people just want a little tiny pie, right? But at the end of the day, if we're talking about what the best pie is, right? What is Auntie May's best pie? It's going to be a mix of this like crust, of this filling flavor, of the sweetness, of the savoriness, right? Of the different textures in it, like how flaky is it? All this type of stuff that really makes the best thing. And at the end of the day, you're trying to show like what is the best pie in America, not just which one's the sweetest or which one's the biggest.
Absolutely.
Like
absolutely. And it starts with just living and breathing and seeing and every day experiencing not just real estate for myself, but managing over $1 billion in these single family portfolios. It is that beautiful concoction of pie that comes together to deliver these financial outcomes.
Yeah.
It's not my team. I don't get out of bed excited about delivering cash flow for you.
Yeah.
Right. I like delivering cash flow for you, but I get excited about delivering an outcome for you. Helping send your kid to college, helping you retire earlier than you thought possible, helping you to go on that trip around the world that you never thought possible, paid by way of this investment. The only way to get to those outcomes is you have to understand how to get there, the 5 profit centers, and then you have to work with a market that is built to serve all 5 of them.
There you go.
And that's what that's the pie show that we're talking about today.
That's the pie, baby. That's the pie. Merry calendars out here. All right, GC, before we do that, we got a couple questions about Summit. Jen Filson asks, hey guys, is Greg's daughter, Bella, going to be making Don't Be Average bracelets again this year for JWB Cares? I too have been making friendship bracelets lately, and I have an idea. Would it be okay if I donated part of the friendship bracelet to the profits of JWB Cares when we're at Summit? Let me know if you bless this idea.
Isn't our community just amazing?
It's amazing.
It's amazing. Jen's amazing. We are going through and sitting down and saying, hey, how can we maximize the opportunity to raise money for JWB Cares right now? So Jen, why don't we talk offline and make sure that we're all coordinated here, because we are going to be making a big push for donations, because those donations go to I'm going to wait to announce it with you all, but those donations are going to go to make affordable homes more affordable for many families here in Jacksonville. So we'll coordinate. Thank you for offering, and we'll just make sure that we're all on the same page I'm so blessed to have you in the network.
And of course, Jen is referring to the moment that stole the show at the last summit, where Bella got up and made her this like impassioned speech about how she's an entrepreneur and she's making these bracelets for a good cause. It was amazing.
That's my girl.
That's your girl. That's your girl. You cried about that at least thrice.
I did.
All right. Jamila Bonahum says, "What are the discount code for the live event?" No discount code, right? Just like it's just like one straight ticket. Kept it very affordable for what you're going to get. So
$199.
$199. And Anonymous Atende says, "So all needed is conversation and interest, or did he say you actually need to have already invested?"
You need to have a property under contract.
Okay, there you go. That being said, GC, let's get into this presentation of this amazing research. And just like that awesome list that we just gave, there's a bunch more really, really good info on these slides. We're not going to go through every number, but you're going to want it. And nobody goes back and looks at screenshots. Just text this number. It's an only text number, right? You can't call this number. Text this number. We'll send you these slides. You're going to get it. You're going to be able to follow along later on. It's all good. Don't waste your time, doing that stuff. And by the way, you can also text that number if you want to set up an appointment or you have other questions. And last but not least, we're going to talk about real numbers. This is a show for informational purposes only, not actual investment advice. You should be doing your own due diligence and like checking that stuff, right?
Well said.
All right, buddy. So again, 7 criteria for determining the best market. Let's go into the individual criterias shortly here, GC. You want to talk about rent to price ratio?
I do. And I just saw that.
But I think we're going into home price appreciation first.
Oh, yeah. Well, okay. So let's just kind of start up. So as I was thinking about, my boy Pablo over here challenged me. He's like, hey, let's go deeper here. Let's help the everyday person understand the market perspective. I was like, well, what data do I have access to that I think would be kind of like a marker that an everyday person might go to say, well, this might be the best market. Mm-hmm. And so the first thing that I thought of was I can use the data that we have access to, we pay a lot of money for, and share it with all of you on, let's think about the highest appreciating market in the country. Right. I know you've seen the slide, but did you have any idea what the highest market in the country would have been?
I did not realize that it was San Jose, California.
I wouldn't have said San Jose.
Although, if we are to look at it the way that we're looking at a 40-year time horizon, it makes a lot of sense.
I probably would have thought San Francisco, which is close.
Yeah,
so I wouldn't have been far off. But how cool is it to know that over the last 40 some odd years here, the actual highest home price appreciating, or the highest appreciating market in the country is none other than San Jose, California. So again, lots of data here. But the highest annualized home price appreciation rate of any of the major metros in the country is 6.3% per year.
Got it. So again, San Jose, California, median home sales price of like 1.8 million. That means it's appreciated like heck over the last 40 years. So at least it's 6.3% home price appreciation. It also has a rent to price ratio of 0.23% and a median income of $157,000 and a little bit more, and it's actually shrinking in population, GC.
Yeah, so let's spend a couple of seconds here just talking about a few new terms, right, and why they're important.
Yeah.
Okay, rent to price ratio is very important. It's actually the number one criteria that I listed out on those 7. I chose it as number 1 for a reason. That's in order of importance. Rent to price ratio simply takes the monthly rent and compares it to the home price. And what this is just an easy gauge for you to understand, are you in the ballpark of a cash flow positive market? If you are way low on your rent to price ratio, you should erase it from your list of investing in rental properties unless you want to be severely cash flow negative by investing in that market. And what that simply says is like, are my rents close enough to the purchase price? Yeah. That I'm going to have a realistic chance of producing positive cash flow.
Yep, makes sense.
So just kind of a rule of thumb, if you have a rent to price ratio for your overall market of less than 0.5%, you're probably not going to have the opportunity for positive cash flow in workforce housing neighborhoods that you want to be investing in, and to do it passively.
Got it. So this is kind of like what you're saying of like, hey, we're baking this pie. Right now, we might be over engineering for the sweetness.
Yes.
And we're not and we're not, we're paying no attention to like the crust that's going to hold it all together and that's going to keep me there, which is this positive cash flow thing. So I'm not coming out of pocket long term here.
Yes.
Got it.
Yes. I would look at this, and this is kind of my quick analysis. High cost, high risk, not so sure of a high reward. I don't know that the type of job growth and median income growth that has come there over the last 40 years will be the same over the next 40 years.
Yeah.
So I'm not so sure of, the high reward later on. I see risk everywhere here. And, and then of course, population declining is a big red flag.
Okay.
So that's not where I would put my money.
So let's go all the way to the other side of the spectrum from home price appreciation, go to like rent price appreciation, right? We all love growing cash flow.
There we go. And that's super important. Not only do we want to make sure that our cash flows are strong today, we want a history of high rent price appreciation over time that shows stability in the marketplace, that shows indirectly job growth, that shows median income growth as well.
Okay.
And so Fort Myers, Florida came in as the highest rent price appreciation market in the entire country over the last 40 some odd years at 4.7% annualized rent price appreciation. And you can see how that stacks up against the U.S. 3.6% is the average, and Jacksonville is just a skosh hair. A skosh hair. Either a skosh or a hair. One of the two, not a skosh hair.
I don't know.
Higher there, just roughly at 3.6% as well.
I mean, when I look at this thing with Fort Myers, it's looking pretty good on the surface, right? Like it also has a pretty high home price appreciation of 5.3% per year. We got that high rent price appreciation. But then what I'm seeing over here is this population of 800. Is that 888 or is it 868? I can't
888.
888, right? So the triple eights here, population, and that to me kind of like signifies a bit of a risk, right?
Yes, this is important. We've talked about how that million people in a market threshold is very important. That's another easy thing. If we're thinking about this from the everyday investor who maybe hasn't invested before and you're trying to choose a market, a million residents or more is critical, because what that does, it's an easy gauge for you to understand what type of economy do they have there? What type of population do they have there?
Yeah.
And to be quite honest, a million residents was the threshold 10 years ago when I got in. I haven't actually increased that threshold, even though his population has gone up. But if you don't have at least 1 million people living there, you put yourself at economic risk, you put yourself at population risk, you put yourself at risk of maybe the one industry or the one big company might decide to leave there, and then all of a sudden your significant rental demand or home price demand is out the door and you're stuck in a situation you don't want to be. So that's why current population of 1 million or more is the second criteria when evaluating a property. And that's what would steer me away from Fort Myers. The other thing to keep in mind here, Fort Myers prices are already, I don't have it in front of me here, but I think it was like $400,000. So if you think about it, does Fort Myers already close to the median home sales price of the country? And we need more population to get it to 1 million people. As more population comes, hopefully, what do you think is going to happen to home prices?
It's going to go up.
It's going to go up.
Yeah.
So the rent to price ratio is going to likely get worse because it's already sort of at the median home sales price, but it needs more population to get to a market that we would consider.
Yeah. When I think about now this idea of population, now we're talking about that risk mitigation piece, right? Like I think of a population of under 1 million, probably doesn't have any Fortune 500 companies there, probably has like real kind of like could have very seasonal or very market fluctuated employment, right? So that could really affect vacancy rates. It could really affect kind of like the volatility of the market there. If I'm thinking of the pie analogy, it's the most likely that might have an ingredient that the FDA might classify as bad for you later on.
Yeah.
Or it may make it go bad kind of thing, right? So that's just this idea of, man, it looks really good on home price appreciation, looks really good on rent price appreciation. But at the end of the day, the ingredients in this thing, may have something that's bad for me that isn't really disclosed yet.
Exactly. And remember, in rental property investing, the time in the game is what matters. That's how you benefit the most from all 5 profit centers. And so you want to mitigate your risk from that company leaving or that industry leaving or some government regulation saying that can't go on, that business can't prosper like it used to there. All those things are big risks when you have under 1 million people living there.
Got it. Let's go on to the next ingredient in the pie here. It's rent to price ratio. And we got Detroit, Michigan at pole position here.
Yeah, and this is a common one. Maybe we'll spend some time here. I know when we were listening to the Bigger Pockets podcast earlier, rent to price ratio is a big focus, especially for newer investors and sometimes even advanced investors, to be quite honest. Rent to price ratio is what communicates to most people cash flow.
High cash flow.
High cash flow.
Yeah.
And so the best rent to price ratio in the country actually is Detroit, Michigan right now. So the rent to price ratio is actually 0.83%. If you remember what it was in San Jose, I think it was like 0.23%.
Yeah, correct.
So
correct.
it's pretty much the best to the worst, right?
Yeah.
And, earlier on when I was sharing my thoughts on what drives me to put this together today, it's because, again, so many people focus on one thing. If you focus on one thing, best rent to price ratio here, you're probably giving something else up, right?
Yeah.
If you focus just on growth and you said San Jose is the place to be, you're giving up cash flow, right?
Yeah.
Well, Detroit is the opposite, right? Because look at home price appreciation and rent price appreciation, significantly lower than the U.S. average and Jacksonville's average.
Yeah.
And oh, by the way, people are leaving Detroit over the last 5 years.
Yeah.
So you've got you are getting cash flow for sure. Should be easy to find cash flow there. But what are you giving up, right? What are you leaving on the table after you hold on to this thing for 10 or 20 years?
The biggest piece of the pie.
The biggest piece of the pie.
Yeah. The home price appreciation, the growth in your portfolio. Yeah, Leslie said it herself. I think Leslie experienced Detroit, right? And I think that's where she invested first. And she's saying Detroit's number one in rent to price ratio because the houses are so darn cheap, right? 150,000 median income, and they don't appreciate very much at all. Exactly what you're saying. So you're looking at this thing, you're seeing, man, rent price is great. I can get in at a low price, right? But at the end of the day, historical home price appreciation doesn't look very good. And future home price appreciation looks even worse because the population is shrinking as well.
But you can see why a lot of everyday investors gravitate to a market like Detroit. And unfortunately, many people either have a poor experience or if they hold on after 10 years, they're not making as much money if they're investing in a better market than, a better market out there. It's because it's inexpensive to get in.
Yeah.
I mean, you can get into a Detroit property probably for less than, I don't know, 40 grand out of pocket.
Yeah.
So if you're a new investor, you don't understand all 5 profit centers, you're listening to one of these lists as like best rent to price ratio in the country, best cash flow in the country.
Yeah.
You might go down this path. Unfortunately, if you want to be in the game for a full market cycle, if you want to accomplish these financial outcomes, if you want to enjoy the process and not have as much turnover, then there's a better market for you.
When I'm thinking high rent to price ratio and low price, I'm thinking of a pie that's delicious. It's ready. It's just little. You're not going to be able to share it with your family, right? Because it's not going to grow. It's not going to turn into this thing that it's not going to be worth that much more later on, right? Like the
teeny pie.
This is the tiny pie. This is the taster pie.
There we go.
And ain't nothing wrong with a little taster pie, but you're going to want more, right? Like you want it to grow. You want it to feed your retirement, not just give you a amuse-bouche of cash flow over here, right? Right. I feel like I'm crushing these analogies, man. All right, buddy. So then you decided to go to highest median income growth market. What does median income mean to us?
Yeah, so median income means how do I know that my residents are going to be able to afford the rent today? So limiting maintenance and vacancy cost today. And what pattern has this market shown over the last 5 years or longer to show that this income is continuing to grow? Is it outpacing the growth of the entire country?
So as houses get more expensive, as rent gets more expensive, can people afford it?
Yes.
Right?
Yes, exactly.
All right. So who we got here winning?
So we have Stockton, California. So again,
California.
Before I did this deep dive, if you had asked me what's the highest median income growth market in the country, I would have said Stockton.
If you told me to name 50 U.S. cities, I don't think I would have named
I didn't even know where Stockton was. I think it's about 2 hours from San Francisco.
It's outside the Bay Area, close to Sacramento. Yeah.
Right. Because at first I was like, oh, is this right next to San Francisco? Or are they just kind of like adjusting it? But if you live in Stockton, I don't know if you, I don't know if you think you're from San Francisco or something. Anyways, so Stockton was interesting to me. High home price appreciation, Rent price appreciation above the U.S. average. We love both of those. Median home sales price, 500,000 though, right?
Pretty
If we're
high.
looking for cash flow, if you have a median home sales price at or above the U.S. average, really difficult to find it. But then look again, less than 1 million people living there, no Fortune 500 companies. And again, that cash flow is going to be harder and harder in order to find.
If I look at these statistics, if I think about this, right, this median home sales price, low population, rapid median income growth, I'm thinking this is like a spillover market from like another market, right? Like it would make sense, kind of like Riverside, California to LA. Stockton might be that like San Francisco. Yeah, cool. People are willing to commute an hour and a half in order to have like a big old house and be there, and that drives up income values. But it's not really driven by its own economic factors as much as a derivative of another market, and that to me gives me some risk at a very, very high price.
Yeah, I don't really know. Do people, if you're an hour and a half, I know we have some folks from the Bay Area who checked in earlier. Tell us about Stockton. Do people live in Stockton and travel, commute to San Francisco? Because that would make sense as far as why you're thinking that.
Yeah, Renee is saying Stockton is Central Valley, about 2 hours from San Fran. When I think 2 hours from San Fran, I think of Tahoe.
Yeah, yeah.
Right. And I think Sacramento is somewhere in that range or whatever, but I don't know. I guess we're not super familiar to it. It might be agriculture. I don't know, Renee. Let us know. Yes, you can commute, is what Punkash says. Yeah, a lot of traffic. Tough commute, I would absolutely imagine. So again, smaller market. It has the population piece means it doesn't control its own future as much as you'd like to because of the base. High priced homes. Means that rent is maybe not going to get you there.
It was closer than any market that I thought that would be close to being a potential cash flow market. Stockton was closer than any market I expected anywhere around the Bay Area or somewhere close, but just not there, right? You're going to get negative cash flow if you want it to be in workforce housing neighborhoods, passively done for you. And there's better markets out there.
Yeah. And so Renee's giving us more. They typically commute to places like Livermore and Modesto. All I know about Livermore is that the Kelly Slater wave pool is there. So huge economic driver for me.
There we go.
But that being said, Andrew Barnhill's bringing up a good point. And California, right? So like kind of not exactly a landlord friendly state. And that has its own variabilities as well, right?
Well said. And
Lawrence Livermore National IAB, Internet Air Force Base, IAB.
Yeah.
Right.
I don't know.
Oh, National Laboratory.
Oh, I see.
So high price scientist jobs, I would imagine. Thank you, Renee. Already adding to the community, man. I hope you stick around, Renee. I hope you stick around. Darren Seaman is asking, does population density versus just absolute population number come into play to account for geographic size of the market?
Interesting. I think density really comes into play when we're talking about like downtowns. So like small areas where there are a high concentration of jobs and hopefully a high concentration of people, I think matters. Overall for an MSA, I don't know that density really matters. I think you can play pros and cons to a more dense or a less dense MSA. So simple answer is no, I don't think density matters for the overall number of people living in an MSA. I think when you're talking about an MSA, it's talking about that area that drives the economics for that region. So I think you can really just go based on the total population for that MSA.
And right on time. It's a great question, Darren, because the next thing that we're going to talk about is highest population growth market. GC, what do you think about highest population growth? What does that say to you?
Population growth means that you're going to have a significant demand for both renting and buying homes. So this is the demand side of the equation, and you want to be in a market that shows significant history of population growth. And what we tracked here was the last 5 years.
Okay, so winner?
The winner is Myrtle Beach, South Carolina. So population growth of 19.1% over the last 5 years. Just to compare that to the U.S. average, a little bit under 2% for the country over the last 5 years. And Jacksonville, not too shabby there, 11%.
Yeah.
But Myrtle Beach, South Carolina is the winner for population growth. Now, strong home price appreciation. We love the population growth. But again, it's already priced above the U.S. average for home prices. So again, if I'm thinking, man, it's close, I really do love the population growth, but I already know that home prices are above the national average. And then the other thing is current population. The reason why population growth is probably so high is because they started with a lower number as well. Let's keep that in perspective, right? So is that number 590,000? So not anywhere close to a million, as it may continue to grow at a high rate. It's going to maybe get to that million, but guess what? Home prices are likely going to outpace rents, and you'd be even farther away from cash flow, which is a main staple of a good investment here.
Yeah, got it. So median home sales price above the national average, really nice looking home price appreciation, really nice looking median income growth. Actually, sorry, median income growth it actually is pretty nice looking, right?
Yeah.
Under Jacksonville, but still pretty nice looking. Low population and high population growth. So like low population, high population growth, already expensive. Sounds to me like a pie that is built from someone not from town, right? Like if you're in Key West and you're serving key lime pies, it's one thing. If you're in Key West and you're serving chicken pot pies because there's people coming down from elsewhere and that's what they want, it kind of like risks this like not immigration, but like, you know, people moving there and kind of like changing the dynamic of the market rapidly is essentially kind
You
of
might
like what
say, why am I going to Key West to get chicken pot pie when I could go to Sheboygan to get chicken pot pie?
Correct. The not from man. I just kind of sniffed this out from a mile away, being from Miami, right? Like the pain points of a city that's being built for people from not from there.
Yes.
Are very, very real, right? It starts to really stratify kind of like the cost of living and the median wage and the things that are happening there. And eventually it leads to like a lot of pain. And that is what leads to confrontations between landlords and tenants.
Yeah, listen, it's hard enough to grow your city, and most cities would love for their cities to grow like Miami has,
Yeah.
like in the sense of like the economic prosperity of Miami. But there's a downside to the normal ways that cities grow when it comes in from outside factors coming in, and the home prices rise so much that the people who support the city can't even live within a short drive's distance. It creates real problems that hurt the long run, the sustainability of that growth. So interesting, when we were talking about density of an MSA, that's what was going on in my head.
That's what's going on in my head too.
Right.
Yeah,
So, in theory, like density would lead to more economic activity on one hand, but the other hand is when you don't have density, you get the opportunity to grow and build your city the right way. So not only do you achieve that growth, but it's in conjunction where everybody can win. And that way it's sustainable for generations to come. And that's what we have as an opportunity in Jacksonville, largely because we are not dense as an overall MSA.
Yeah, I mean, we're obviously about to get into like how Jacksonville ranks against all this stuff, but yeah, it's a great point by Darren, right? Like this idea of density and size of MSA and population growth. Like you said, it is rare to find a market that isn't dense, is growing, has all these other things that are these other great like income growth and people coming in, and like the lack of density is close to an urban center, and it's not just like it's expanding into like it's like borders,
Right. Yeah.
right, and has a million plus, a million and a half, or whatever it is, right? Like to me that part of it is a real nuance that I bet it would be really hard to find another comparable thing.
Yeah.
In
my head, I'd love to be able to objectively like look at that factor, but it's just kind of what you understand when you're here.
Yeah. And Darren's from here, right? So
Yeah.
like he gets it, right? All right. So that being said, how does Jacksonville rank to all this stuff, GC?
So this is where this is what happened from like 9 o'clock when I put my kids to bed last night, and I started to think about this slide, and what got me so excited to share it all with you guys. It's not about being number one in this market. You are not number one if you're number one. It's about how many of these 7 criteria are you above average in, because that leads to max profitability over the 5 profit centers. So I went through and I ranked all of these markets that were winners in their each individual category. And I compared that to Jacksonville. And I compare it to the rest of the country. And what we found is this, and I hope this slide communicates some value to all of you. Jacksonville is the only U.S. market that hits 7 out of 7 investment criteria for being in the top 50 overall. You can see here, San Jose is top 50 in 2 categories. Fort Myers is top 50 in 4. Detroit is 3. Stockton, California is 4. And Myrtle Beach is 3. When you see some number less than 7 here, what that communicates to you is you're leaving money on the table somewhere. You're leaving money on the table either in a lot of cash flow or you're leaving money on the table in a lot of growth. And spoiler alert, everybody, you guys all show up every single week. You knew that I am deeply passionate about Jacksonville. I've done a similar presentation here many times, and I've looked at different angles to show you why I believe Jacksonville is the best market in the country, but never this deep, and never looked at all 99 metros and never ranked them like this. It is so wonderful as you go deeper and deeper into the data here. Your viewpoints, your beliefs get more and more reinforced as to why this truly is a special market that no other market in the country can touch.
I want to just hit a little bit deeper into the asset class specifically, right? Because I think there is a lot of these lists out there of like best real estate market, and they're not saying exactly what kind of real estate market. When it comes to single family home real estate investing alone, there's multiple ways to skin this cat, right? There's like the wholesale, there's the fix and flip, there's the BRRRR, there's short-term rentals, there is passive rental in passive buy and hold rental properties. When I think about the biggest difference between the buy and hold rental property and every other asset class, I think of that saying when they say in real estate you make your money on the buy. And what we have talked about a lot on this show is that in real estate, and when it comes to rental properties, buy and hold rental properties, you really make your money on the hold.
Yes.
Right. So you want to be having a much bigger kind of like a wider scope of what could go wrong, a wider scope of like how balanced this is going to be, the experience it's going to be, and it's kind of like everything else is dating or one night stands. This is marriage, right? Like you're trying to like live with this thing for 30 years. And if I had a son or a daughter and I think about who I want them to marry, right? Like I might say, dude, go for the class clown. You're going to have fun. You're going to giggle forever, right? Like you probably would have picked me. I won that in high school, right? Like you might say, go for the most likely to succeed, right? Like that person's going to give you the most money and you're going to have these things, but maybe they're not like super emotionally intelligent. Maybe they're not going to treat you great. You might want to go for the most athletic, right? Hot body, right? Like you're like the attractive level is next level. But at the end of the day, I want my child to marry best all around, right? Like I want that person I wanted. You probably won that in high school, right? GC or most athletic.
Most sneaky athletic.
Or best looking. All right. So at the end of the day, like, right, like if you're really in this thing for the long run, you wanna bring the person with the most balanced kind of like amount of attributes to the table that's going to provide you this kind of like well-rounded life the way that you want to build when you're investing in buy and hold rental properties.
100%, right? I love marrying the 2 points that you made there, right? The buy and hold is how you win here. Making money on the hold is a different approach than people think when investing in real estate, but it's not that different than other successful investing strategies. We all know Warren Buffett, right? The Oracle of Omaha.
Yeah.
When he buys something, does he sell it very often?
No, he holds.
Do you think his strategy is making money on the hold?
Yes.
Yeah, exactly. Because he invests in the long-term fundamentals. He invests in the ones that have the best pie, where they have the strong fundamentals today and they have the opportunity for growth in the future. We're adopting those same principles and we're applying it to rental property markets out there. But I think, as just a general statement, everybody is so do this today, make money tomorrow. And, unfortunately, it usually doesn't work that way. Most people find that doesn't work. A much better approach is to use this objective criteria, focus on those 7 criteria, and then understand what market is best for me to create this best profitability, 10 years down the road, 15 years down the road, 20 years down the road.
Yeah. And, like speaking of this idea of falling in love with the best athlete, right? Who's most attractive right now? This was the list that this Bigger Pockets podcast just came out with, right? They were very like into cash flow markets. They were very into low home price and high rent to price ratios, right? Like there was Oklahoma City, Huntsville, Columbus, Ohio, Indianapolis, Indiana. And honestly, I was appalled that out of 3 panelists, nobody picked Jacksonville. So you did a little bit of work here and you put the screws to it. Tell me about this, GC.
I'm always appalled. I wasn't surprised though. I
Yeah.
I know Bigger Pockets, right?
Yeah.
And Bigger Pockets is probably the best pulse on what your everyday rental property investors are thinking. And when you go and ask somebody who is the best rental, or what is the best rental property market to invest in, if you just ask everyday people, and you probably met some folks at conferences or in forums or whatnot, they're probably thinking about low-priced markets that produce cash flow.
Yep.
But these folks fail to understand how much profitability they are leaving on the table because, quite frankly, they have never owned rental properties for themselves for 10 years, 15 years, 20 years. They've never managed $1 billion in rental property assets and have seen those returns perform month in, month out for years and years and years, and have had the pleasure of seeing folks that have gone and taken those trips worldwide and have sent their kids to college and have been able to retire much earlier or retire in their own home rather than having to go and downsize and leave their community. Those things tend to happen when you're working with somebody who has actually lived it. And when you live it, you understand there's 5 ways to do it. You don't put a list together to go and find number 1 cash flow. You don't find a list to go and find lowest price market. So I'm not surprised, appalled. I wouldn't probably go there because I see it over and over and over again. I mean, this is the world. This is what has raised me to, evangelize this message. It's because people get it wrong.
Yeah.
And there's so much harm in getting it wrong, not just for today, but for your financial outcomes, 5 years, 10 years, 15 years down the road. So long story short, I did want to go back to one slide here because I think there's some value in looking at this. Guys, I would encourage you to do your research, right? If you have questions about a market you're considering, reach out to my team, schedule a phone call. If we have a conversation and you'd like us to do some research, of course, after we get on the phone with you, and you'd like us to do some research and help you compare between your markets, we're happy to do that, right? Now, what we can't do is if you guys just say, hey, send me the market report on the top 100 metros, not able to do that. We actually are not allowed to do that from the consultant that we get the content from. So, but what I'm saying is do your own research and go down this path. Go down the same column path that I just brought you down here. First, look at rent to price ratio.
Yeah.
Okay. What you're going to find with a lot of these low price cash flow markets is they're going to be winners. They're going to be in the top 50. Then go to current population. You'll see a couple of them fall off, right? But you'll probably have a few. By the time you get to the third criteria, which is home price appreciation, my guess is you're not going to have a single one that's going to hit 3 out of 3. Again, you're not going to see it for rent price appreciation. So when you miss on number 3 and number 4, you are missing, again, 60 to 80% of your total wealth pie. 60% of that beautiful, what kind of pie is this that we're talking about now? Is this a beautiful big pie?
What is the best pie? The biggest, most delicious
pie?
Pie in the world. Man, that's a tough one, dude.
Whatever your favorite pie is.
Yeah, that's a personal question, right?
You're going to miss out on your favorite pie. But if you miss out on ingredient 3 and ingredient 4, I guarantee it's not going to be the biggest and best pie you could have. So please go through that. And again, if you are curious about a market you're strongly considering, jump on the phone with us, set up an appointment. We're happy to do some of that analysis with you.
GC, what is the best way to reach out to the team to compare markets? Is the text number?
Text number is the easiest way to get an appointment scheduled. So 904-293-0341, or if you want to send an email to info@jwbcompanies.com, set up an appointment. Happy to walk through it with you. We love those types of questions.
Alex Diaz is asking, can I have Greg evaluate my 8-home portfolio to get the 3-family bundle before end of January? 100%, right?
I mean, yeah, absolutely. Well, we have, so are we, I'm a little confused. Alex, are you already?
Yeah. Alex has an 8-home portfolio.
Oh, love that.
Yeah.
That's fantastic. Alex, reach out to the team. We've got our folks set up, ready to help you. Of course, we can help you before the end of January. Love the fact that you're a client. Thanks for being a trusted client. And, man, hope you keep coming back to the show.
Yeah. Alex, I would love to have you. I don't know if you've watched past shows where we do a portfolio breakdown, but I think we would love to have you.
Ooh, I love that.
We,
That's a
we, we
great
we would love to
opportunity.
have you be a guest and tell us like why you invested and whatnot. And then Greg puts together this like custom breakdown of how your portfolio has performed.
We're
So
just getting that set up for the coming month, so that'll be a great one. I think we have an opening in March.
cool, cool. And Alex is coming to the seminar, right? I assume that's the summit. Um, a couple people are asking, what's the number again? 904-293-0341. Shoot us a text. We'd love to make that happen. And yeah, this was great, GC. What am I missing? What am I missing here? Just the what is the final best pie in the world?
Oh yeah, I think people know where we were going, right? I mean, guys, obviously.
Well, I tell you what, this is a good question.
Okay.
Vamsi asked this in the chat. I answered it. I gave my own answer, but I would like to see what you say. Just out of curiosity, I have seen the JWB website and you specialize in funding and buying properties in Jacksonville, Florida. That's the reason why Jacksonville is on the top of your rank list, or is it vice versa, GC?
Well, let's be very clear. I am 100% biased here.
Yeah,
right? I have been investing my own money in
Yeah.
Jacksonville since 2006. I have 400 single-family rental properties, and I own about 20 city blocks in downtown Jacksonville.
But 20 city blocks of downtown Jacksonville. Sorry, go ahead.
I'm 100% biased here.
Yeah.
Okay.
And you are all in on Jacksonville.
And I am all
Yeah,
in.
yeah.
And I have been preaching for the last 19 years for every one of our clients to invest right alongside me in these neighborhoods in Jacksonville only. It is the same thing I said in 2006, and it's 2025, and I'm saying it again. So I am 100% biased. In addition to that, there's data to support this.
Yeah.
And that, I think that is the hope for the show today. I think everybody probably assumed that we were going to land with Jacksonville being the best market. But I try to spend some time, and I spend a whole lot of time trying to take this out of my head and say, somebody brand new, what might you think? What might be your guiding light? Say, hey, that might be the right market. And then let's compare it. And as you can see today, and especially if you request the slides, I think what you'll do is you'll draw a similar conclusion that we did here on the show, that there's just no other markets that are in the top 50 for these 7 criteria, and these 7 criteria lead to max profitability across 5 profit centers.
I'm glad that was your answer, GC. What I wrote word for word in the chat was, honestly, Vamsi, it's both. JWB has strategically dedicated themselves to this market and gone all in on it because it has incredible qualities. But at the end of the day, yes, of course, we're presenting this data because it validates our thesis, right? This is a marketing exercise after all, guys. But more than anything, we're a community, right, Vamsi? So, like the reason why we do these shows live and we do the summit and we bring everybody together is because you don't have to hear it from us. Right, like you can hear from us. It's gonna be like the hook that gets you kind of like interested, this education. But we find that transparency is one of the most important qualities, like trust, in real estate investing, especially in buy and hold. So the ability to ask anybody here in the chat, kind of like what their experience is and what they believe of these markets, or come to the summit, meet 100 other investors that have created all this different kind of like types of wealth. Right, there's a reason why we have a community here that has created $305 million worth of wealth, right? This is a slide that we continue to update, and we weren't going to show it, but for let the record show that these are receipts, right? Like we have almost 4 people that have made over $2 million of profits in this market, 38 people that have made $1 million plus, 162 that have made 500K, 767 that have over 100K. I myself am one of these folks. I'm not an employee of JWB. I'm an investor with JWB that hosts the show with one of my best friends, GC over here, and I've learned through all of this that this is what I want to be doing. So yeah, great question. We love to lean into transparency. So definitely pumped that you brought that into the Q&A.
Me too.
And you answer that.
What courage it takes to spend an hour here.
Yeah.
What courage it takes to ask a question in general. And then I just love questions that are a little bit on the tougher side.
Yeah.
And, I think that helps everybody learn, helps everybody trust more.
Yeah.
Helps you understand that this asset class is not for everybody. It's not perfect, right? So let's keep leaning in, especially with those tougher questions.
Awesome. Vamsi says thanks. It helps. Vamsi, happy to have you. Happy to have Pankaj, who's new. Also says Greg and team. Nice analysis metrics. Great for Jack's delightful presentation and your positive energy. You can tap into this positive energy every single Tuesday, right? Like we do not take it for granted that over 100 people showed up today to be part of this show. Take an hour of your day in the middle of a work week, just to come here, ask some questions, and be a part of this. Make friends in the chat, add value. Like Leslie, Alex coming in here and couldn't get their, like had something that wasn't being resolved. So you come here. It's all about transparency. It's all about connection, and we love this community. I can't wait to see people at the summit. Only 15 tickets left, jwbsummit.com. It's going to be an awesome, awesome experience, unlike anything that you've ever experienced. We have this every single year. My favorite was when, I keep forgetting her name, but when she came up to it, she goes, "Your company excites me," right? Like just 3 days of connection. Like you're just going to be really, it's impossible not to get excited by what's happening in this market and seeing the future, and then seeing the type of team that you have here on the ground and the type of people that are doing this, right? So Vamsi says, I'm currently working to build that $100 million portfolio, and I'm curious to know more from you guys. All right.
Come and hang out more.
Oh, Vamsi, come on down. You can hang out on Tuesdays. You can come here in a month, or you can just text that number and just book a call, and you'll get the full experience.
This has been great.
This has been an awesome show, man.
Yes.
Great job putting the research together, bud. I really appreciate it. So, that being said, what do we have next week? Oh man, next week. We're a little bit nervous.
Yes, we are.
About next week's show, because this is a apolitical show, but we would not be doing our job if we didn't talk about the things that people most care about. And right now, with all these executive orders, with all these strategic initiatives in place, we are going to talk about what these new executive orders mean to housing and mean to rental property investors. So we are stepping way out of our comfort zone to give you as much data and perspective as we can as rental property investors, not political analysts. We hope nobody gets in a fight in the chat. Please keep it friendly, but we are going to talk about it. So we hope you join us this Tuesday. We're going to give our own analysis on this stuff because everybody else is doing it. And at the end of the day, what we've noticed is that most people just haven't been doing this game in this asset class for 20 years with 6,000 properties and 20 city blocks and owning 400, like all this type of stuff. Like it is our duty to pull Greg's perspective for everybody. Hope you join us on Tuesday. That being said, GC, any final words of advice before we see our friends on Tuesday's call? Oh, wait. Lee asked a question that I haven't addressed. I'm sorry. MVP asked a question. You got to answer it. Hey, guys, refresh my memory on the size of Jack's residence needs to reach to go over the threshold to the next level of benefits for turnkey rental properties owners. I think he's talking about the VIP program or he's talking about downtown.
I think he's talking about downtown. So overall, Jax has 1.8 million people in our metro, which we're already there. That is over 1 million folks. We are growing at a very high rate. You can see how Jacksonville stacks up to the other markets and population growth, median income growth. We didn't even talk about median income. Did you know that Jacksonville has, I think it was like top 15 median incomes in the entire country?
No, I just knew it was the highest in Florida.
Yeah, exactly. It's really high.
Wow, interesting.
Yeah, crazy. Higher than the national average. It might not be top 15. It might be top 30, but it's much higher than the national average and much higher than we would expect it. So anyways, we're already there as far as an overall metric. Now, downtown, and we're going to talk more about this on the summit, but a key threshold is 10,000 residents living in downtown Jacksonville. And we're on the cusp. We actually think one of JWB's projects, the Gateway project, is the one that will send us over the edge for 10,000 residents in downtown Jacksonville. So we're close. We're not there yet, but that is something we're going to be talking a lot more about in the coming years.
Yeah, so Greg just showed me some statistics that are epic about this idea, right? But like the main thing, what Lee is asking, since we have so many new folks here, is, we've talked a lot on the show about what happens when a city goes from having an 8-hour downtown to having a 16-hour downtown. And that's what we've seen in Denver, Nashville, Austin, Charlotte. All the cities that you wish you would have invested in 10 years ago have this like common thing that the downtown went from being a place that you just go to work and then you go home to a place that you go work, live, play, right? 16 hours downtown. Jamila was asking, Lee was asking, what's the secret metric of like next level of benefits for investors in downtown, right? And what we know is that for a downtown to go from 8-hour to 16-hour, the magic number is 10,000 residents in the urban core. Jacksonville 10 years ago and for a really, really long time was somewhere around 3,000. And over the last 10 years, it's inched up and up and up and up. And now it's like either at like high 9,000s or it's already crossed the 10,000 threshold because all of that stuff is already being built, shovels in the ground, units coming out of the ground. And what happens at that point is developer incentives go away because now they don't need incentives. They're able to just say there's 10,000 people here. Who wants to be the anchor tenant in my mixed high-rise building? And Whole Foods is down, Target is down, Publix is down, right? Like it's really, really easy to sell the funding for that on the commercial side. And that brings the people and it creates this flywheel. And what we have found out is that when this happens, the rent appreciation, the home price appreciation curve bends. Right? Like it just goes parabolic. We've seen an average of a 27% increase in home price appreciation rates in the cities that do this. Jacksonville is right on the cusp of that. This summit is probably the last one before we actually cross that threshold. And we don't know how much longer until the secret gets out, right? So the way that I describe it, it's kind of like buying Apple stock right after they release the iPod, knowing that the iPhone is coming, knowing the iPad's coming, knowing it's about to become this like parabolic stock. And that is something that we're all really excited about. 10,000 is the number, Lee.
I'll give you 2 quick stats and then we'll let you get on with your day. Did you know, we know Nashville is one of the big success stories for revitalized downtowns. Did you know that Jacksonville's home prices were higher than Nashville's home prices in 2005? But now Nashville's home prices, I think, are 23 or 25% higher than down Jacksonville's. And similar things have happened in Denver, Nashville, Tampa, Austin. What do all those have in common, Pablo?
A downtown.
A revitalized downtown. We're going to put more stats behind this and show you guys what I uncovered late last night in the coming weeks and certainly at Summit. And then lastly, the stat that I was telling at the end of the day here, median income growth. Jacksonville is number 10 in the country for median income growth. Who would have thought?
Who would have thought? Who would have thought? Who would have thought? All right, that is just a little bonus for staying here till the end. Also a little bonus, shout out to Robert Grayson, whose favorite pie is sweet potato mixed pecan pie, unless you count pizza pie. Very witty response, my friend. Very witty response. GC, any advice for our friends in the Not Your Average Investor Show community?